Hey there, everyone. When I founded Retail Profit 13 years ago, discussions about the future of retail were scarce. And frankly, most conversations about the quote unquote future looked at, trends for the coming year or the coming sales cycle. Well, since that time, obviously, a cacophony of conversation has ensued around the future of retail. And I know that it's hard sometimes to discern between those voices in the market that are simply recycling ideas and theories and concepts that they come across, and those that are actually developing their own insights and bringing a unique perspective to the conversation. And I'm always on the lookout for the latter. And that's why in this episode, I want to share a conversation that I had recently with a gentleman named Joe Kaziukėnas. Joe is the founder and CEO of Marketplace Pulse, a business intelligence firm that is focused on the future of e-commerce, and in particular, the growth strategies and performance of online marketplaces. Now, I've been following Joe for some time now, and I really think you're going to enjoy his take on the market. So without further ado, here is my conversation with Joe Kaziukėnas, founder and CEO of Marketplace Pulse. Welcome to Retail Profit. It's great to have you. I've been following you for some time now, and I've really appreciated a lot of your insights and your takes. So for those people that may not be familiar with you and what you do, why don't we start there? Who are you and what the heck do you do?
Hey, Doug, thanks for having me. I'm Joe. I've been in e-commerce for a long time, and I'm spending most of my time currently looking at marketplaces and trying to find interesting data to explain the sort of trends and behaviors that are happening around the US as well as internationally, mostly around marketplaces like Amazon, eBay, and the rest.
What got you there? What was it about marketplaces, Joe, that were particularly fascinating to you?
No particular reason, but I remember moving to the US and seeing Amazon as the main e-commerce driver. And it doesn't take long to realize that the marketplace is actually behind it. And that's the reason why Amazon is so successful. It's not the retail that powers Amazon, it is the marketplace. And once you start digging into it, you realize in markets like China and in other markets in Europe, marketplaces are how most people get their goods when they shop online.
And frankly, when they shop offline, I mean, let's face it. I mean, the world of retail is sort of founded on the principle of the marketplace to begin with, whether it's physical or digital. And we're going to talk a lot about Amazon as we get into our conversation here.
I mean, absolutely. Marketplace as a concept is probably the oldest retail concept that there is. You had bazaars or physical marketplaces for probably 5,000 years or more in cities, and now you just have them online, as well as marketplaces being used for concepts like taxis, hotels, and pretty much everything else.
Yeah, it's interesting in that sort of historical perspective, I think, is really important because, I've sort of said too that we look at direct to consumer today as kind of a new phenomenon, but let's go back 1,000 years or so, and everything was direct to consumer, right? The maker and the seller were principally the same thing, and it's kind of this industrial revolutionary period was really sort of a blip in the timeline. And we've come right back to marketplaces, direct to consumer, the creator economy, and all of these things that are sort of historic really in their foundations. But anyway, it is not a history lesson today. Today, we are going to be looking more to the future. And with that in mind, my first question for you is this. We've all heard this narrative now that, everything we're seeing is an acceleration of things that would have happened anyway. We just got there a lot faster. We've sort of covered 10 years of e-commerce growth in whatever it is now, 18 months or, 19 months. Tell me about that. I know that you've done some analysis that sort of says, well, I don't know, have we really accelerated 10 years into the future of the growth of e-commerce? But give me your perspective on that idea.
I think at this point last year, we've all seen that chart, which says 10 years of growth in 3 weeks or 4 weeks. And it looked really exciting. And it looked like e-commerce was having this massive step change. All of a sudden, we went from shopping offline to shopping online. But if you started thinking about it more, you're like, oh, wait a second, what happened with offline retail? Why did all of a sudden everyone move to e-commerce? And that chart ended up being a lie, or ended up being kind of selling a narrative which was not true, because as much as e-commerce increased, offline spending decreased, and that's why you saw this massive growth in percentages. But fast forward to today, when we look at e-commerce penetration in the US, that penetration today is exactly at the number it was going to be if e-commerce just kept growing at the average rate before the pandemic began. So in the first few months after the pandemic, it had a massive boost, and then it slowly started getting back to the trend line it was going to be at. The same happened for overall e-commerce as it happened for Amazon. So to kind of sum it up, we are at the point right now where even if the pandemic did not happen, we probably would have reached the same e-commerce penetration. Amazon probably would have reached the same amount of sales. The only difference right now is that offline and online spending has increased. So e-commerce is a much bigger market than it used to be, but that's because people are spending everywhere more. But as a share of overall retail, it's actually at the percentage number, at a market share figure, where it probably would have been even if the pandemic didn't happen, which to me is kind of, I guess, disappointing maybe, or strange, or maybe weird. But I guess to me, the reason about why that is that e-commerce in the West doesn't really solve a fundamental challenge, or doesn't solve a fundamental problem. It's not like in the markets like India or China, where traditional retail doesn't exist as well developed as in the US or Europe. So in the US, it's mostly a convenience feature. And even though e-commerce looks like a great thing for people like us in the industry, for a lot of other people, offline shopping is just as good. And that's why e-commerce keeps growing very slowly over the years, but it doesn't matter what happens. It doesn't matter even if a pandemic happens, e-commerce doesn't see this massive step change because it's still just a convenience feature.
Right. Exactly. And it's sort of the difference between, and I talk about this a little bit in my last book, as we're looking at what's happening in a marketplace of any kind, there's a tendency to look at instances and call them trends. Right.
Absolutely,
something happens
absolutely.
once, or it happens twice, and we say, ooh, it's a trend. You know, e-commerce is covering all this ground. It was kind of more of a convulsion, wasn't it? I mean, it was a response to an obvious situation where consumers simply, for a period of time, couldn't shop in stores, had to look for alternatives online. But my question is, I mean, to some extent, we've seen this movie before. We've seen it in China during SARS, 2002, 2003. And it did really and truly sort of kickstart the Chinese foray into e-commerce. And we saw the growth of giants like Alibaba and JD come out of that. And their growth was sort of parabolic over a period of, 5 to 10 years. This year, China crossed the 50% threshold in terms of e-commerce. So is it fair to say, in your opinion, while we may not have actually seen this great acceleration that people are talking about, is it fair to say that consumer behaviors and awareness around e-commerce has changed? People have tried new services, they've tried new retailers. Do you foresee us taking that same sort of growth path that the Chinese might have?
This is probably my favorite pet peeve, but I rarely like to compare the West to China. I think the market has developed in parallel, but it's not necessarily indicative of what's going to happen in the West. But having said that, I think what's hidden in the e-commerce numbers and the market share numbers are different categories, which are probably going to be much more important in the future. So if you take online grocery, for example, online grocery in the US barely exists. I think it's just a couple percentage points, a couple percent market share of overall grocery spending. That clearly went up a lot during the pandemic and has taught people the sort of the benefits and the affordances it provides when you shop for groceries online. I'm sure more people will come back to that and continue using it. I'm not sure how that affects the rest of shopping, because the reality of the US as well as Europe is that most people have access to great goods in less than 10 miles from them. Mm-hmm. I think it's a famous statistic Walmart likes to use, that 90 5% or so of the population has a Walmart less than 10 miles from them. That's not the same situation in China or in India or in many other places. So that's why you saw this massive boom of e-commerce there, because it provided access to goods which were otherwise unavailable. In the US, most people have access to goods, at least the goods they need. But I think the more interesting categories like online grocery or maybe even buying cars online, that showed people, but the pandemic has showed people that there's a different way, and that different way, I think, is going to continue to develop over time. I'm not sure if buying books or buying bicycle parts online is a fundamental shift for most people, because if they were using e-commerce before, they just used more of it. But for many other people, it just wasn't a breaking change during the pandemic to start buying bike parts online.
Now, you also mentioned Amazon, and you can't have a conversation about marketplaces or pretty much anything these days without talking about Amazon. So one of the hot topics around Amazon right now is around Amazon aggregators, these funds that are sprouting up and dumping tens, hundreds of millions of dollars, billions of dollars into aggregating Amazon sellers. And I know you've written a lot on this and spoken a lot on it. For those people that might not be indoctrinated to what this phenomenon is, can you first of all just explain what are these aggregators? What's the point? And then I want to get your perspective on whether or not it's something we should be worried about.
So first of all, Amazon Marketplace consists of millions of small sellers who are small businesses selling their goods. Most of them are private label goods they're sourced from China, for example. They create a brand around them and make them, or try to make them, successful on Amazon. As that market matured, as it grew in GMV, which at this point is hundreds of billions of dollars, people start to realize that some of these brands are extremely successful and some of them are actually quite profitable. As the market matured and it kept growing, money started looking for ways to enter it and hedge and bet on the Amazon Marketplace to be successful in the future. These are known as Amazon aggregators. And what they do is they raise money to acquire these third-party sellers on the Amazon Marketplace in hopes to build a portfolio of brands, as well as optimize costs and achieve efficiency. The market has raised over $10 billion just in this year alone, and we still have a month to go. And a lot of that money is already getting deployed in acquiring these small sellers. But the fundamental question in that industry is, yes, the capital is flowing in. Yes, there's a lot of excitement. There's a lot of deals happening. The liquidity in the market is very, very rich. The fundamental question is, what are you actually aggregating? And what is the future of these aggregating firms? Because the hope is to build the sort of P&G or Unilever of Amazon, to build a holding company, a portfolio of brands which are successful on Amazon as well as elsewhere, and just keep adding more and more of them over time. That is a dream, and that's the future, which might happen, which it might not happen. But there's already almost 100 aggregators. I think you cannot have 100 P&Gs. You cannot have 100 Unilevers. You will see probably just a few winners, and those few winners will have a portfolio of successful brands on Amazon, as well as maybe Shopify stores, Walmart, and elsewhere.
Indeed. Staying on Amazon, and I came across a clip here. This is from Barron's in October of 2021, this year. So it says, with Thursday night's disappointing earnings news, Amazon's revenue has fallen short of what Wall Street expected for the second quarter in a row. The company is seeing slowing post-pandemic sales while dealing with product shortages and higher delivery and labor costs. It was the first time Amazon has missed two consecutive quarterly misses since the middle two quarters of 2018. So my question to you is, did the pandemic really make Amazon any stronger? Did it fundamentally jettison Amazon into a new phase of its evolution?
I think the pandemic made Amazon invest even more into people as well as fulfillment infrastructure, and that's the sort of the bottleneck that is Amazon. It has doubled its fulfillment infrastructure over the last 2 years. It also has doubled the number of employees it has. I think now it has 1.5 million employees, which is a crazy number of people. And it seems to be now adding people faster than it is actually adding revenue. So the pandemic did boost Amazon as the rest of e-commerce early on. But as we were just discussing before, at this point, their sales are at the level they probably would have reached even if a pandemic didn't happen, given the average growth rate before. So did the pandemic boost Amazon? Yes, to a certain degree, but it also reminded everyone on the reliance on Amazon and the issues that might mean for the future, as it is such a large employer, such a large controller of physical infrastructure. Just today, I saw the news that next year, I think they will surpass FedEx and UPS in fulfillment volume. That's crazy.
Yeah.
We have this single point of failure in retail, in e-commerce that is currently built around Amazon. So I think it's an interesting and difficult time for Amazon to figure out for the next 10 years to come, how can it keep scaling without having to double and triple and quadruple its physical footprint, as well as having to add more and more people.
Exactly.
10 years from now, are we going to see Amazon with 10 million employees or maybe 15 million employees? Where are these people going to come from? Are we going to create unions? Are we going to be happy working with Amazon? This is like a multi-dimensional challenge for Amazon to figure out, because as much as it is an e-commerce company, which we think is a tech play, it has so much physical footprint, people and warehouses and buildings and the rest. How can you manage that? That's the difficult part.
Right.
And I'm not sure if we know what's going to happen.
And you're right. And we don't. But we can take some educated guesses at it. And I think you raise a couple of really interesting points. First of all, I mean, if your business operates solely, if your marketplace fundamentally operates, let's take Amazon Web Services out of the equation for a second. Let's just talk about it from a marketplace standpoint. Every time you add a product, you add complexity. Every time you add, another layer to that marketplace, again, you add a layer of complexity, potentially a layer of cost. You get to a point where you're no longer the upstart challenger in the marketplace, right? You're the behemoth, the incumbent. And a lot of the organizational energy in Amazon goes from sort of this acute customer focus to now trying to sustain the organization, fighting the legal battles, taking on the unions, making sure that your workforce doesn't get COVID. All these things sap energy away from your consumer focus. So I think that's first of all, and it's going to lead me to my next question for you. But I think the other thing is Amazon's got to be looking, and this is sort of the premise of resurrecting retail, is that Amazon's got to be looking at other categories and saying, look, we have, 250,000 Prime members or something, or 250 million Prime members. That's a market in of itself. Is there a way that we can introduce more lucrative categories and services to this audience, whether it's banking or education or shipping and transportation? We've seen those moves. Other categories like insurance or healthcare, for example. So do you see that same sort of point where Amazon has to come to and say, look, we can continue to scale this marketplace into infinity, but it just adds cost. Could we leverage more lucrative categories and services? Is that part of the equation for you?
I think Amazon is probably facing the innovator's dilemma. How do you disrupt yourself? Amazon has clearly found a working model which has worked for the last 2 decades, and it's probably going to work for the next decade at least, which is fulfill a lot of goods from the same warehouses in boxes to people in a day or two. And that apparently works for a lot of people, for most of the goods, for most of the time. The question is, does that model also work for online groceries or buying cars or whatever else that might be? Does that model work for when people shop on social media? If the metaverse becomes a thing, does Amazon work in the metaverse? How do they think about that? And I think that's perhaps the challenge which can become for Amazon, is like, how does it fit itself if consumer preferences, if the market shifts? Does it become what I guess you could describe what you could describe Walmart as today, which is an incumbent. Does Amazon become an incumbent of e-commerce as different methods, as different kind of consumer preferences become the norm, and Amazon is faced with an ability to do that? I think an interesting example of that is if, let's say, we all move to 10-minute, 15-minute delivery for groceries, or just delivery for everything. Amazon is unequipped for that. It cannot do that. It doesn't have this sort of inner city fulfillment networks and distribution. It can do 2-day and 1-day delivery very well. It can do same-day delivery in some cities. It cannot do 10-minute or 15-minute delivery because its model has been built around having hundreds of millions of products. You cannot do that for 15-minute delivery. For 15-minute delivery, you probably have tens of thousands of products or thousands of products. Yeah. That is a fundamentally different model. So all this to say is that Amazon is not in a position, I think, to innovate in terms of how we shop and how things are get delivered to us, which is both a criticism of Amazon and the reason why it continues to succeed, because what it has found to work is working really well for them. So the question is, are these different methods, are these different fulfillment methods as well, discovery methods, are we going to grow in importance over time? And who is going to be the company bringing them to the market? Because for the last 2 decades, Amazon has seen pretty much no competition. It's only today now that Walmart and Target and some other companies are finding ways to do interesting things in the market and do them differently. But for a long time, Amazon has no competition. Who's going to be the competitor 10 years from now to actually challenge Amazon on these fundamental levels? And is Amazon going to be forced to find a way? And knowing Amazon, I'm sure it will figure out something to do, but it's facing these fundamental challenges. Does it need to innovate, or can it just stay doing its own thing? Yeah. And for now, I think it could, because it has not updated its site. It has not changed its ways for many, many years, and it's working really well for them. Even if the growth has appeared to have stalled over the last couple of quarters, that's only because we compared to this crazy boost last year.
Interesting, though, and you mentioned Walmart, and there it is on my question sheet. But 2015, Walmart kind of hit a wall. And if I recall correctly, 2015 was the first year that since Walmart went public, that it did not grow. In fact, I think sales and profitability declined, and Amazon was actually, exceeding them at that point in terms of market cap. So, and I went down to Walmart to talk to their group, and the mood was not good, believe me. And I think fundamentally, Walmart was in a very similar situation in that where it should have started making investments in e-commerce. The resident thinking inside the organization was, hey, why would we screw with this? Like our supercenter stores are rocking. We're making tons of money. E-commerce is sort of an aberration to what we do. Let's keep our eye on the game that got us here, sort of thing. And that was a fundamental mistake, really. They should have been pouring money into e-commerce efforts, and they subsequently bought Jet. So I guess that's a fundamental question. And you mentioned Amazon's site hasn't changed, right? Go with what works. But is that in essence the death sentence for Amazon? Are we sort of seeing, in your opinion, maybe what could be the apex of Amazon's success right now?
I think it's pretty far away from being an apex. To me, it all depends on who is going to be the competitor. For Walmart, obviously Amazon came around and forced Walmart to rethink their view on e-commerce and to reinvest and to build for the future, because they realized their initial assumptions for e-commerce being a small thing didn't plan out, and e-commerce just kept growing more and more. Who's going to come to challenge Amazon in these meaningful ways and force them to change? Does that exist currently in the market? Probably not. And we'll have to wait and see of what actually that becomes being.
And so I'll push back a little bit on that, because I've thought about that too. Is there one entity out there that could come along and just kind of wipe the floor with Amazon? And to your point, probably not. I mean, Alibaba doesn't have enough of a foothold in the markets where Amazon is dominant. They face a lot of smaller regional players in places like Russia and South America and that sort of thing. But right, to your point, there's no heir apparent to the throne sort of thing. But my question is, has the nature of e-commerce, generally speaking, fundamentally changed? And I point here to, this is from the Wall Street Journal. They say in May, and this is about Alibaba, Chief Executive Daniel Zhang listed increased competition as one of the company's biggest obstacles of the past year, and said any profit that exceeded last year's would be poured back into improving its e-commerce business. And I think that the competition that Zhang was referring to in that is not a single competitor, but an en masse sort of shift in the way e-commerce is distributed in the market. And I wonder, now what we see is that every form of entertainment practically has a shopping cart appended to it, whether it's TikTok, Instagram, you name it. Virtually every media touch point now has a commercial aspect to it. So my question, Joe, is this: has there been sort of a dispersion of e-commerce? Are we sort of seeing the last moments of the destination website that I go to and shop in a conscious way, and more sort of retail becoming ambient in everything that we encounter?
I think we are starting to taste the fact that e-commerce doesn't have to be a destination. It can be inside of many other things, which for most people, that means Instagram, Facebook, Netflix, YouTube, Pinterest. Right. I think that's 100% true. The thing is, at the moment, these things are very small. Are we going to get bigger? Yes. How much bigger? I think that's a fundamental question. I think the users and obviously people are not as used to today to think of shopping as a thing you do through these social media platforms, through discovery platforms. And it's obviously changing, but I think it's changing very, very slowly. And it's not changing for a lot of goods. Are you going to be buying toilet paper from an ad on Instagram? Probably not.
I don't want to see that ad,
frankly. Are you going to be buying a dress from an ad you saw on Instagram? Absolutely. So it works for some goods, some of the time for some people. I think Amazon and Walmart and Target work for most goods most of the time for most people, and that's the difference. And additionally, I think in the US you see this kind of discovery being built by one group of companies: Facebook, Instagram, YouTube, and the rest. And then the retail is still being built by a subset of different companies, which is Amazon, Walmart, and the rest. So they all are pushing their own different models, and there is really no cross pollination. No one is working together because these are obviously fundamentally two separate companies, and there's really no benefit of them building this fully integrated experience. So the question is, which of them is going to come first? Is this like a chicken and egg problem? Is Amazon going to figure out social commerce, or is social commerce going to figure out Amazon?
Right.
I don't know. We'll see. But I fundamentally agree that the challenger for Amazon, if it's going to come, is probably going to be a company. It's going to be a different way of shopping.
Right.
We don't know yet what that's going to be. I think we like live commerce, we like video commerce, we like social commerce, we like interactive commerce, we like all sorts of different things. But these things are just a taste of what they can become. I was, for example, recently very disappointed to see Netflix announce a partnership that they're going to be selling merchandise through Walmart. Netflix has more users on their app than Walmart.
Right.
Netflix is installed in all the TVs. You cannot buy anything from a Netflix app on the TV or the website or the app. And instead of thinking of integrating into that, which I'm sure they thought, I don't know why that has not happened, they instead went to Walmart to sell their goods. So we talk all this time about live commerce, social commerce, and we still go back to making partnerships with Walmart, which is not a critique of Walmart. I'm just saying we talk about the future and we go back to doing the past. So at which point Netflix says, we don't need a partnership with Walmart. We can just sell our goods through the in-app experience on the TVs. That's what I'm waiting for. But we are getting a taste of it, but it doesn't happen yet.
Right. I just want to shift gears here for a second and move over to, how do you put it? We've talked about Amazon competitors. And at one point when I was speaking to Harley Finkelstein, who's the president of this company, he said, if you took all our merchants and you put them together under one banner, in terms of GMV, they would be second only to Amazon. So we would be kind of the heir apparent there. So we're talking about Shopify, obviously. And there's been this sort of ongoing debate about it, are they going to become a marketplace? Aren't they going to become a marketplace? And you recently came out and you said, well, look, whether they are or they aren't, a lot of the things that they're doing sure look and sound and smell like a marketplace. So talk to me about Shopify. What do you sort of observe there, and what do you think their move is?
A year ago, Shopify launched an app called Shop, which remains to be one of the most downloaded apps on the app stores because it's being recommended by Shopify in their emails. And that app over the year has added most of the functionality you would need for a marketplace. You can search for goods, you can add them to a cart, you can check them out, all without leaving the app. So they are running a marketplace. The challenge is Shopify going to be pushing that to consumers as a way to shop on Shopify? Or is it the role of brands to be bringing users to their own websites to transact there? Because I think the challenge for Shopify is that they keep getting dragged into these conversations being compared against Amazon. Whatever Shopify does, it's always a comparison to Amazon. They are, because of their GMV across all the merchants, the second largest only to Amazon, which begs this comparison. But fundamentally, they do run a completely different model. You cannot shop across the Shopify ecosystem. You can only shop across different Shopify stores. And most of the time, you don't really know that they're Shopify stores. So when we talk about Shopify GMV, we can also talk about QuickBooks GMV for e-commerce or FedEx GMV for e-commerce. There's a lot of companies which power e-commerce. Shopify is just one of them. Yeah. But they are in a position to build the marketplace. Many, many times, though, they've said that they're not going to do that. And over time, I think I've learned to agree with them that perhaps this market doesn't really need Shopify to say, oh, the way to compete in the e-commerce realm is to do what Amazon did 20 years ago. Let's go back to the past and rebuild what they do. Because the final result is just going to be a worse version of Amazon with some Shopify excitement, but fundamentally, it's not going to challenge Amazon in a meaningful way. It's not going to challenge Walmart and the rest. So the question is, for Shopify, which is a $200 billion company, how can it keep growing in its market share and its relevance without owning the relationship with the actual consumers? I don't know what they're going to end up deciding, but the biggest challenge for the Shopify merchant is acquisition of users. They have to pay a lot for that through Facebook, through Google Ads. Shopify has no solution for that, and I'm not sure yet if it wants to be that solution. But if it keeps bringing up that GMV figure, and if it keeps comparing itself to the bigger retailers and smaller retailers, it needs to figure out how can it actually solve that for the brands it is a platform for.
Last question for you. Last topic of conversation. Anyway, can't have a conversation about retail without talking about the metaverse, right? Or can we? I don't know. But it seems like you can't read, Twitter for 5 minutes without coming across 10 articles on the metaverse today. And I think certainly a force to be reckoned with. I mean, it seems like in many ways the natural progression of our digital lives, that these experiences we have digitally just become more tactile, more immersive, more engaged through other forms of technology. But this goes to Facebook. Obviously, what is it, a month ago now or so, Facebook announced that it's no longer Facebook. The artist formerly known as Facebook is now Meta. Meta is clearly turning its gaze toward the metaverse. And some people erroneously sort of say Facebook wants to create the metaverse, which of course it can't, because the metaverse is bigger than Facebook. But do you feel, and certainly Facebook is a force in retail, let's face it, a lot of transactions happen on or through Facebook. Do you think that this rebranding, because Facebook has had its own share of problems of late, but do you think this rebranding and this emphasis on the metaverse is going to, kind of polish Facebook's reputation and put them in a better place and allow them to maybe capitalize on more commerce in the metaverse? Or do you think it's just going to fall flat?
I don't even know where to begin. I did watch Mark's announcement video, and I'm still not sure what the metaverse they imagine means. I
Yeah.
think we already live in the metaverse in some realm or another. Social media is the metaverse, I think, to most people. Many people I talk to on a given basis, I've not met in person, like yourself, or
Right.
many people I've not even seen their faces of. I've only seen their Twitter avatars, and we interact on a daily basis. That is a metaverse to me.
Mhm.
I'm not sure what the metaverse is, what Facebook means. It seems to involve VR, it seems to involve AR, it seems to involve some other things. I think all of this is very, very interesting. I'm very excited. I think a lot of that is going to come much later than we think it might come. And I think we'll find a way to kind of work with it when it actually materializes.
Yeah.
I'm usually very skeptical of announcements. Don't tell me what you're going to build. Show me what you're going to build.
Mhm.
Facebook so far has not showed anything around the metaverse. It changed
Right.
its name, it made an announcement, nothing else exists. So when it exists, I think we can understand what it actually means. But I think at this point, we are almost trying to do this mental leapfrogging of trying to agree with what Facebook did in the metaverse definition and trying to kind of attach ourselves onto it. I don't think that has to be the case. I think we can just look at what they said and say, oh, it's very exciting. It probably is going to mean something in the future, but they showed a lot of rough ideas with no practical application to this day. If that becomes the reality in the future, we'll find a way to work around it. But I think we can't make kind of strategical decisions today around the metaverse because that doesn't exist in its kind of reality. So I think we have to work with what we have today or what we're going to have in the next couple of years. And we don't necessarily have to kind of get as excited about this as Facebook is trying to make us.
Joe, this has been awesome. And we do have to leave it there, although I think we could probably keep going for another hour on various things. But really and truly, thank you so much for joining me. I'm sure that our audience has learned a lot, and you've probably changed a lot of perspectives on a lot of things in a very short period of time. So again, thanks so much for being with me.
Hey, thanks for having me.
Thanks for joining me today. I hope you enjoyed the discussion, and remember to hit the like and subscribe button for more. And as always, you can find us at retailprofit.com.